Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Patel Airtime, a potential five bagger, a very good stock that has been consolidating and trading at very interesting levels. So let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Patel Airtime, here's a small request. You kindly support me on Patreon. Once you do that, help me grow the channel. Help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, you can pay $100 upfront. You get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company, established in 1973, it designs a range of air conditioning, refrigeration and heat mass transfer equipment. The product portfolio include shell and tube heat exchangers, air fan cooler, you have pressure vessels, shell and fan tube, you can say heat exchanger, etc. Majorly have clients in India from a number of industries like oil and gas, thermal power, petrochemicals, fertilizers, chemicals, cement, etc. Some major clients are Indian Oil, Reliance Industries, Siemens, and HP. The market cap of the company is 110 crores. Now the financials of the company, these are Q4 numbers. So sales went up by 11% and profit was flat at around 3 crores owing to higher expenses. Zero debt of the company, and there's decent promoter holding. ROE of around 12% is fine, and margins at 10% has dipped from around 14-15% about a couple of years back or before the pandemic. Now, if we look at the performance, then it has been a big outperformer in 2021, but it has declined around 40% from those levels. It had a market cap of around, you can say, 145 crore, now is reduced to 100 crores, now 110 crores. Have been producing decent numbers, but has been volatile lately, and the numbers have been up and down also on the bottom line, or the top line has been growing smartly. Profits have increased consistently on if you say on an yearly basis from FY 16-17 onwards. Valuations look extremely reasonable at around, you can say, currently 9 times earnings, but it would be even cheaper if you look at 1 or 2 year forward. So why I believe it can be 5x in the next few years, maybe 2 years, 3 years down the line, could easily be 550, 600 crore market cap. Industry being served to do well as India opens up. If India opens up completely, and that is what is happening, there's more demand for oil and oil products, etc. Plus more demand for refrigeration and all, because there are a lot of products in the consumer domain that requires refrigeration apart from the FMCG and the kind of food products. You have poultry, etc., meat, etc., that requires a refrigeration and condensed heating, and pressure equipments are always in demand. Currently it is trading at 7 times FY23 earnings, 9 times current earnings, very attractively priced at around 7 times earnings. And demand for its services should only increase as demand for oil increases as we go along, as industries open up. So a potentially undiscovered consumer oriented stock. This is majorly a consumer oriented stock, as it serves companies which are in the consumer domain or indirectly which are related to consumerism. If you look at Indian Oil, HP, etc., that is direct link to the vehicles that move around, and they will increase as the businesses open up completely. So huge opportunity once sales increases, because it has done well on the margins front. It's just that the sales need to explode big time, and then you will see how the numbers expand. Currently it is trading at only 0.3 0.4 times sales, which is very reasonable if you consider other kind of companies in other industries. If you look at technicals, then very strong on charts. Short-term support lies around 180 and deeper support at 145. Currently around 217, 218. Any dips towards 200 is a buying opportunity, and a major breakout is expected above 235. So anybody who wants to trade, although it's a very small cap company like a micro cap, so I would not suggest trading in it. But if you really want to do that, then do it above 235, 240 on closing. Otherwise, from an investment perspective, you can buy on slight 5-7% dips from a 3 to 5 year time frame. So valuations reasonable to accumulate even at these levels, and some can buy even more at around 200, 190 levels or so. Buy on major declines as markets are volatile. Can be a consistent performer post 2022. I believe from 23 onwards, these sort of companies should do well. And once it surges past 500 crore market cap, it can be sold. So once it reaches around 550, 600 crore market cap, it would be slightly expensive based on the numbers. So then you can probably book profit. It's not that you can perennially hold the stock, but yes, there is a chance that the stock could go towards you can say 550, 600 crore market cap. So this was a video on Patel Airtime. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.